Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning. What do we got? We got Wednesday, August 3rd. Okay, lots going on. Sorry about the inconsistent podcast here. We've got had a sick kid, got now a sick wife, and it's been blocking and tackling over here big time. But right this morning, Bullard on CNBC talking inflation being high. We need to move aggressively. Got to keep rates up for a long period of time to be sure inflation is headed in the right direction. So kind of trying to poo-poo the idea of a rate cut as early as Q1 23 or even first half 23. It sounds like every Fed member is trying to walk back the, we're at neutral rate kind of commentary that Powell was hinting at the presser. That's been the mode operandi. They're all trying to walk it back. Rates have gone up a little bit. Now they've gone up quite a bit actually real recently, just across the yield curve. So it's having some success. Maybe the market did listen the past couple days. We've had a couple down days. Today looking up after a couple down days. Energy up as well. Metals are all lower. Copper's pretty flat. Sad gold is down a little bit. We actually took some chips off the table. I told you we did own that junior ETF. GDXJ. We took some off there just simply because I don't trust the move necessarily. It could be a little bit early. Reason being, if in fact we are starting to move away from the talk of a pivot sooner than later, you could get a resumption in dollar strength. You could get a resumption in rate moves. So the gold is a little less compelling after the move it's had. Still have some though, make no mistake. And talk about earnings. We've got we like to talk about a market of stocks more than a stock market. Earnings season is very telling, in my opinion. We've got some definite companies that can move forward, I think, and look good for the back half of this year, and other ones that aren't quite as compelling. So on the compelling side, Mosaic reported a couple days ago. The quarter was fine. Ho-hum actually missed expectations, I think, on the top and bottom, but we're talking big numbers here for these guys. Stock is cheap, trades at 3 times. Is it 3 times? Like 3 point something times forward earnings. Doing a massive buyback. Free cash flow is so strong. The stock's got like an 18% free cash flow yield. Upgraded this morning actually over at Citi. Target is $61. And there's dynamics that have been in place for years, leading to what's probably going to be a good environment for the fertilizer stocks in general going forward, or at least for the foreseeable future. So like that one a lot. We are long, and we will get longer. Even like Uber came out, got their free cash flow positive that they talked about. Dara talked about doing that after the last quarter. Attained the free cash flow positive. Trades 1.5 times sales. I think that one's probably even worth a shot if that's your cup of tea. That one's probably going to get taken up by the institutions. It looks like it's been de-risked. It looks like it's de-risked itself. You don't have the monster free cash flow yield necessarily. It's gotten free cash flow positive, but we're not talking about a big cash generator and or dividend payer here. But still, I think there's a lot of interest still in that name. It probably goes higher. PayPal, 23 times forward earnings is where it trades. Quarter was a good quarter. Elliott Management now, Activist Hedge Fund, has a stake in the company. They're doing a buyback. I think this is a good company that's just got its absolute butt kicked. That again, I think they have de-risked themselves. That's kind of how I like to think about it. Feels like that's what the right term is. So that one looks like it can go higher. I got some positive comments from the sell side out there this morning. Ping getting acquired by Thoma Bravo. Actually, their quarter wasn't that great, but they're getting acquired by Thoma Bravo. 28 and change, I believe, is share. And Orlando Bravo was on CNBC a couple months ago talking about 5 times sales. Enterprise software companies looking so compelling. Then he sort of walked those comments back just like 2 weeks later. But yet here they are in there acquiring Ping for stock trades at 4.5 times sales. So there you go. You got your 5 times sales. They're licking their chops. Apparently, they're putting their money where their mouth is. Could be good sympathy for Okta on that. Although I don't know, people look at the print and see what the quarter was. Maybe not so great. I'm not sure. We'll have to check that out. But circling back to Lockheed Martin. This is what we talked about. This is a secular defense. I think is a secular growth area. I mean, there's just no other way to think about it these days. Especially after Pelosi trip to Taiwan, and now China's got a total bee in their bonnet. So I do like the whole space. Lockheed Martin and Raytheon are the two that we own over here. I'm taking a look at L3 Harris. Might do something there. But I did talk about Lockheed. You might to buy that thing after the earnings report on the dip. That was around I said you might as well wait for the stock to clear the 200-day moving average, so you have some comfort there that it's up through that resistance. It did that, which was 398. Stock now 428. Stock's not done going up. So that looks interesting on a pullback for sure. I think you've got time on the semis. Personally, you're going to get a lot of whether you've got the pure plays, if they're purely on automotive, industrial, like the on semis, everything's hunky-dory. But if they've got a blended business that ties to consumer, then things don't look quite as great, like AMD. So I think you've got time. I just would slowly nibble away at these things. I don't see them running away at this point, but I could be wrong. And that's what I got. Have an awesome day, and we'll be back tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.